It's a useless article. All right, sweet, someone's on here. Let's so I'm going through JFin, right? Someone asked me to do this from my Instagram. So let's so I went ahead and I took a look a little bit beforehand. And right, we read about this equity transfer. Now, we don't know what was transferred, but we do know something was transferred. We don't know exactly what the asset is. I didn't research that yet. But I went ahead and started looking at the earnings, and they didn't look very good at all, right? This is like a leading online individual finance marketplace in China. So this is like some kind of investment, brokerage. Let's see if we can actually find an investor's presentation real quick so we know what we're looking at. Yeah, there's not much on here. So an F1 is a foreign S1 basically. This will tell us a lot about the company. 5/9, this is probably the IPO date. Um, Gotta zoom in a little bit. All right, so these guys registered 16 million shares. So this was a $50 million IPO. That seems pretty small, especially when I just saw this at trading at 7. The market cap on this currently, I think, is 180 million. 180 million. This is a 424, right? This will have an updated share count. So they're offering 3.5 million ADS. Each ADS represents 4 shares. Okay. So, that's a lot of shares. So they're issuing 14 million shares. Tradable shares is an ADS, right? And that's going to be 3.5 million. So they're going to get, what's the, let's see if we can find a price here. Oh, duh, $10, right? So 3.5 times 1050, they're raising 36 million. I mean, that's a decent chunk of change. Oh, this is actually interesting. This was on 510. So this is part. All right, so these ADSs are a little bit confusing. Right, this is part of the IPO, it seems. This is the S1. This is like a, I don't know if this is a follow-on offering, or is this part of, this is the initial, okay. So this is the IPO. $98 million Class A shares and 116 million Class B shares will be issued and outstanding. Class A shares and Class B ordinary shares will have the same rights except for voting and conversion. Okay, that's important. Each Class ordinary share will be entitled to 1 vote, and each Class B ordinary share will be entitled to 10 votes, and will be convertible into one Class A ordinary share. So basically, what's going on here is probably the owners, these guys that started this business, are in complete control of the business because you know, they get 10 votes per every, share that they own compared to 1 vote per share of Class A. So they're probably going to be holding a lot of Class B. And then if they want to sell their shares, they can easily convert it into a Class A ordinary share and let it go, right? So I'm not even going to try it. Mr. Yan, um, our founder, director, and chief executive officer will beneficially own all of the B shares, right? So he owns all of the voting power of this company. Um, Several investors have subscribed for and have been allocated an aggregate number of 3.7 million ADSs, including ADS over allocated by underwriters in this offering at the initial public offering price and at the same terms. These investors are not existing shareholders or directors or officers. All right, now this is the company, a leading online individual finance marketplace in China. So these guys already have competition because I already know 2 companies that also are in this space, right? We're going to pull it up on the trading view screen or chart thing here, right? We have TIGR, right? This one has been under some heat as of late. And then we also have, what's the other one we have? I know I got it on a watch list over here. think it was this one. Yeah, I think it's that one. Yeah. Let's make sure. Hey, what kind of aftermarket screens can I use to see what could possibly have LA tomorrow? Um, I mean, pre-market scanners are good. It kind of really depends on what you're looking for, to be honest. Okay, yeah, this is the company that I was thinking of, right? They're doing the same thing. So we can leave this open and we can compare them. 5.6 million users. These guys have, see, they're the third largest. So I think it goes FUTU and then TIGR and then these guys. All right, so yeah, their numbers are going up a little bit. That's not really what we're interested in here. We want to know how many shares they can sell tomorrow since it is an IPO lockup. Are you short selling? Are you going long stocks? What's the strategy that you're looking for? Because I can help you if I understand a little bit more of what you are trying to do. So this is the corporate structure. Okay, so this is what goes on inside China. The big dog over here owns this. There's a lot going on here. Okay, I gotta zoom out and look at this whole picture. Well, this is gonna be a short trade. Hopefully we get a nice juicy PR and gap it up 15%. Um, so we're gonna want to look at this. It's gonna take a, I don't know if we're gonna be able to finish this in time for it to be a play tomorrow, though. Well, I use fundamentals to get an idea of what direction I think the stock is gonna go, and then what I do is research the stock so I know a little bit more than everyone else, hopefully. Um, yeah, this is gonna be for tomorrow. And if I end up thinking this company is trash and they're going to be selling a lot of shares, uh, cashing in on the IPO, because you got to remember these guys are, you know, they have to sell their shares to reap the benefits of starting the company and now selling the company. They're sellers in this deal. Um, I don't know what the compensation is yet. We got to keep digging, so let's keep going. Because I want this to be, I want the idea is, you want to research these companies so we don't get hurt by them. Now, this is a China company. These ones typically play some games. Like right now, I'm short PDD, and I mean, I'm only down like $1 per share, but they're a little bit tougher, I've noticed, since I've started. All right, so this guy owns, this is the guy with that has all the voting rights, right? He's in complete control of this whole operation. Jeez, this is already a headache because the names. This is going to be hard to track. So, Internet Finance Information. He owns the finance technology. Then we got more technology. And then we have finance information and services, asset management. Okay. More financial services. Oh, okay, so he owns this as well. So he owns two separate companies, which is this company. Now we go over into America. Right, so this is in the Cayman Islands, ADS. This stuff is brutal to read. So this is a peer-to-peer lending. All right. So they own part of this. Yeah, so this is a lot of peer-to-peer lending. It's a cool looking building. I don't think that's their address though. So this is the investor relations page. All right, so I think they're in that building. This guy owns 92% of the voting power. That's a lot. All right, let's see where these guys have their office. Same place. Uh, pretty sure NIO is gonna go bankrupt. I don't know when, but from what I've read, which has only been a little bit. But EV is a really tough industry, so I read an interesting article on the batteries. It was in the Wall Street Journal. It was pretty good. What Tesla thing? I didn't read the news today. I just saw it was up a bit. Do you have a link to the news? I could pull it up and look at it real quick. Alright, so it looks like these guys were growing a bit, right? Well, Tesla doesn't even make the batteries. Panasonic does. Or Panasonic makes Tesla's batteries. NIO. Packed with intel on driverless car technology. Eh. Yeah, that looks like you know what? NIO is probably gonna go bankrupt. I don't think they have a CFO right now. Yeah, they don't have a CFO. Look at this guy, Mr. Lewis, resigns as CFO. Not good. When the CFO resigns, run. It's not something you want to be long. And then delivery update. NIO delivered 2,500 vehicles in October, increasing 25%. That's pretty good, despite the impact from 7-day national holiday. Uh, these guys are just losing. It's not a question, if you can sell a million units of, really anything, but if you're not making any money, what good is it? And that's kind of the situation going on here is, right, vehicle sales, they are increasing, right, a lot. revenues. I mean, s- why is this saying a loss? Oh, I think they're doing quarter over quarter that way. Yeah, year over year. Um, so, year over year is a kind of a better metric, I would say, to use when looking at a company because, if you look over a 3 month period, some companies can crush it 1 month or 1 quarter and, you know, kind of go through a little bit of a cycle on a yearly basis. So usually want to look year over year um, at an individual quarter. That's why I was looking at um, the vehicle sales quarter over quarter. Right, but they lost, yeah, so they lost 3 billion RMB. I mean, they got a negative gross margin. They got a negative gross margin. Why did this go up? Am I reading this right? So it looks like they got a convertible note with Tencent for 200 mil. Hopefully we can, I think we'll be able to see the balance sheet in a minute, but what is the price of the stock? All right, well, still trading under the conversion price. So all these shares are convertible. What date? So they're each putting in 100 mil. So notes will mature in a year. Second transfer, 3 years. Pay 6% principal. So the 1 year notes are convertible into Class A shares at the conversion price of $2.98, it says here. So there's overhead supply, right? I mean, around that $2, $3 area, that 298 area. And the Class A ordinary shares conversion of $3.12. So there's really a decent amount of overhead supply in that area. Let's see what they say about the gross margin. Blah, blah, blah. Vehicle sales in the second quarter, decrease of 7.9% compared to the first quarter, was mainly due to decrease in sales volume caused by EV subsidy reduction announced in the slowdown of macroeconomic conditions in China. Okay, good to know, because I'm short Tesla, so this is important, right? People aren't buying cars in China, and Tesla's building over there in China, right? They got that gigafactory. All right, cost of sales. This is what's important. Cost of sales in the second quarter of 2019. Okay. Vehicle sales, 200 million. Cost of sales, 290 million. Ouch. Okay. That's an increase in cost. So their cars are nearly 9% more expensive to build. Okay. So recall cost in relation to the company's voluntary recall of 4,800 vehicles. Wow. Ouch, that hurts, right? That's a that's a costly total recall cost. Out 50 mil. Okay, but even if you get rid of 50 million off the top line, right, or the second line, we're still looking at a negative gross. Okay, total recall cost in the second quarter, 50 mil. And that includes 40 million recorded of cost of vehicle sales. I'm kidding. This does not look pretty by any means. Tesla would never recall cars. They got these cars driving all over the road in the Smart Summon, but they would never recall them. Vehicle margin, negative 24%. Why did they even go public? I mean, obviously to get the cash, but you know, how did they go public? Who funded this? I mean, they have a negative margin. This is gonna be a zero. This is a zero. This has got to be going to zero. I don't. How much market cap is left in this thing? There's $2 billion. Is this a joke? They must have a ton of cash on the balance sheet. But they didn't. They just got $200 million in an offering. So there's not a lot of cash in the bank. Man, they had recalls. That's not good. They have an NIO power truck. That's 60 miles in 10 minutes. That's pretty good. All right. God, that's so bad. It's actually funny. It's like that bad. Oh my God. They're spending 190 million in R&D, an increase of 20% from the first quarter. Who the hell bought this stock? Why does this have a bid? This is pretty bad. So they lost, I mean, they lost a lot of money. Right, this is easily the most overvalued car company in the world. Hedge my Tesla short with an NIO short. There's no way they come out of this. This is terrible. This might be the worst earnings I've ever read. God, they lost $478 million. That's just one quarter. It got four of those. It's gonna lose its market cap by the end of the year, right? If the market cap's 2 billion and they're gonna lose 500 million a quarter, well, not too smart, but they don't look too good. Man, these guys really lost a lot of money. Lost 50 cents a share. This is a $3 stock. So we don't even care about this anymore. Revenue's 200 mil. Doesn't really mean much. These guys signed this. Maybe they don't have to. All right, so they do have 3 billion. They have $2 billion in cash. Oh no, they don't. They have $300 million in cash, plus the 200 million that they're going to be getting from the investors, which is the CEO and I guess Tencent. So they got another $150 million in short-term investments. Yeah, these guys look dead. They look like they're gonna die. I mean, I think it's pretty obvious, but these are ugly numbers. Really ugly. What a waste of money. That's $6 billion down the drain. They have negative shareholder equity. They literally have a net negative margin. Pretty bad. That's really bad. I mean, I have no clue how this went up today. I mean, I can understand it, but it has no reason to actually increase in value, especially to the extent of 30%. I mean, there's negative shareholder value. Shareholder equity, right? So, 2 point almost $2.6 billion in total liabilities. There's 2.6 and a half billion in total assets. Plus they're losing, what did it say? $480 million. Plus there's a billion shares out there. This is just stupid. This will be a nasty, nasty, nasty death spiral. Probably gonna go short some of this tomorrow. Highly unlikely they get out of that. So these guys are making 44 cents per share. This is in 2008. Right, if we go to their earnings, they got $60 million cash. Okay, I mean, another company with negative shareholders equity. you know, not sure what's going on here with these companies. Okay, revenue down, ugly. So they have revenues of 200 million, operating costs of 130 million, and income of 60 million. We don't get a cash flow statement. I mean, this company kind of looks shitty too, to be honest. It looks, I mean, this looks like a short. Why did these guys not sign? This is the F1. Where are their signatures of the chief risk officer? What deal is this? This is the big one. No. They must not have had to. But why did they not sign that? That's strange. I feel like their names wouldn't be listed if they didn't have to sign it. Not sure what's going on here. If these are China's unicorns, they suck. Right, this is not. This company is trash. Alright, so it's pretty evident these companies are both trash. Now, let's see how many shares they can actually sell. I mean, this company is a little bit better, but not really. Right, declining revenues. I mean, almost every metric on that quarterly was ugly. A lot of risk, obviously. Obviously, this is the wrong company. This is the best one, and it's not even that good. But they're obviously they have the moat. They're winning in China, right? Out of all of these broker services, these guys are the winners. And the corporate structure is a little bit easier to understand, right? This is the most legit. Let's see what their earnings look like. Increase 64%. Increase 50%. Increase 26%. Increase 22%. These guys are crushing it. Trading volume down 2%. That's interesting to know, though. Revenue increased 17%, so that's kind of normal. Daily average client assets up 20%. So margin financing and securities lending balance down. Okay. Total revenues 40%. I kind of like this company. I remember I liked this one a while back. I think I might have gone long it for a little bit. Yeah, but this is a good company. It has an actual, this is a very real moat that they're building here. Um, Continue to like it. All right, so posting into the JFIN file the earnings report, and I'm going to throw in, this needs to be, this is FHL, right? And that one was pretty decent. I continue to like that long. So we might be able to pair that with a short on JFIN into IPO lockup right now. Here's a FHL to compare for. Continues to be strong. All right. So we want to figure out how many shares these guys are able to sell tomorrow going into the lockup, right? Because they're going to be cashing in. So it seems. All right, let's go over the numbers one more time. Negative shareholders equity. That's ugly. Um, they've they've burned through accumulated deficit. Yeah, 200 million. Right, and now their revenues are dropping. Basically, the whole business is, starting to slow down. It's actually decreasing. So, right, we can see that here. Revenues are clearly down. Costs are continuing to increase. We have, we're getting efficient. We're getting more efficient somewhere. It looks like, the sales and marketing is taking a step back, and they're proving that with that step back, they're not able to increase revenue organic without, overspending to capture the customer. So, I mean, things don't look great. It's not like NIO by any means. NIO is absolute trash. This is earning 30 cents a share. So while things don't look great, um, you know, we this isn't a zero, even though they do have quite a ugly balance sheet. Let's see where most of these liabilities are coming. It looks like they're spread out okay. Payroll, related parties, liabilities from investor insurance program. All right, so I mean, like, it doesn't seem like that's actually terrible. You know, $60 million in cash. Another, oh, they got 40 or 38 million in accounts receivable, right? That's how much money is going to be coming into the business. Uh, it looks all right. Definitely not great, but okay. It's not terrible. Let's figure out how many shares they're going to be able to sell, and we could wrap this sucker up. We don't know why they didn't sign this document. I don't know why they didn't sign this. I guess the CFO and CEO is really the important signatures, but the fact that these guys are even on here with empty signatures is a little bit strange. All right, that document doesn't tell us much. We want to go to something like this. And we want to shares eligible for future sale, right? Okay. So they completed the offering. This is going to be so ugly. Upon completion of this offering, we have 3.5 million ADS outstanding, okay? And that 3.5 million represents 14 million shares. Now, of that, right, that's only a small portion of the company. All right, let's keep going. We're gonna Man, this looks like it's gonna be a massive lockup. Where are selling shareholders? They don't have a nice chart for us. I like this is just a joke. This company's trash. All right. Doesn't seem like we can see who holds all the shares. We know the CEO holds all the voting rights, right? He has 92% voting rights. Basically, he's in complete control of the company, and it doesn't look like it'll ever change. And we know what else do we know on this one? Okay. Um, yeah, we don't know how many. This typically will tell us right around this area. It'll typically tell us, give us a nice chart of who is got shares to sell, who is able to sell into the lockup agreement. But we aren't seeing that, and they have to. This is a pretty basic. The rule 144 is, found in all of these, and basically the idea is um, you can sell 1%. So $2.1 million of shares option, yeah. So, and the underwriters are probably, I guess the underwriters may have had to determine if they were going to exercise those shares before this date. Usually it happens after 90 days, I think. But this is a China stock, so it's a little bit, the communication isn't really as good as a typical American company. Yes, there's the 90-day thing. Well, Right. So we know right now 14 million shares represent um, how much has been sold to the open market. And we also know the CEO holds a massive amount. Um, they're gonna have a lot of risk, so let's go up a little bit. Oops. Let's just take a look at the chart real quick. What was that, JFIN? I might short this tomorrow. I'm hopefully we can get a little pop on some kind of trash news. I mean, this thing's getting beat down. Oof, ugly, ugly, ugly. So we do not know the bottom on this sucker. This thing. This has actually been pretty volatile. Sadly, this doesn't really tell us much here. Uh, 1, 2, 3, 4, 5, 6, 7, 8, 9. This is 9 straight red days. Pray they send out a PR and pop it 20%, 25%. You could be looking at $2 a share right there. This is the type of, circumstance where a company is going into, you know, lockup expiration, and we can, if they do send out a PR or whatever, you know, they're probably going to be selling those shares, at least unloading some of them, right? Because they got to cash in if they want to make money on this business. We can take a quick look at we could try to find the executive compensation. Um, right, but they don't have any proxies, so that's a little bit difficult. Let's see what's in effect here. Get off this, get off this. All right, let's see if we can find executive. All right, so we're gonna want to look at that. Right, we want to know related party transactions. We want to know what kind of business the business is doing with its insiders, that kind of thing that would play a role. Sometimes you can find dilution in there, but basically we want to know, you know, is the CEO paying himself in other ways? Uh, hmm, I want to see how much these guys are paying themselves. Yeah, we know the structure on this is pretty confusing. So, this is the table that I was looking for, and what this does is this tells us, everyone that owns this company. So, we know that the CEO owns a lot, right? And he owns 100 million shares. And then what is the ratio of what is it? 3.5 to 14 million, I think it was. Right? So 1 for 4 swap times 0.25. So this guy owns 29 million shares. 29 million times, what's the price of this stock? $7.17. Let's just do $7.20. That's 200 million bucks. I'm pretty sure that seems right. What's the I mean, this is a very heavy supply that can potentially be offloaded onto investors. Right? Market cap is $380 million, and this guy owns $208 million of that. Massive lockup. This is going to get pummeled. There's a reason why it's gotten pummeled the last few days, and we're a little late to the party, but if by chance they do release a PR, we could totally, snake, let's just say they gap this back up to 9. Oops. Okay, we don't really need that. Doesn't mean much. You're looking at a 15% trade at a relatively, if the thesis proves, right, where, they could pump this for 2 weeks before they unload any shares. But it doesn't seem like the business is doing that great. I wouldn't be surprised to see, if I was the CEO, I would be cashing in. And then, these guys, right? So let me bring this back over. These guys can really unload some shares too, right? New Dream, and it has a number 1. So this is owned by the CEO. It's weird. It says owned by Mr. and Mr. Oh, okay. Maybe they're, I guess that, no, but they have the same name. I don't know what that is. If it is a typo, I think the lawyers are supposed to take care of that. And if they didn't take care of that, what else did they take care of? All right, so looks like he owns them through this New Dream Corporation, LLC. And then we have Sunshine Woods Holdings Limited, and they own 12%. Where is that? That's number 2. So and this owned by an employee of the company. Right. And then Dream Glory LP. Da, 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 da. All right, got it. So yeah, this is a massive lockup. If we divide these by three, right, you know, I mean 58 plus 12, we're looking at 70% of the company is held by two people or two companies. So this is a nasty, nasty lockup. I mean, and all these idiots are about to get their. I mean, don't get me wrong, we could obviously get a gap up, but could be ugly for these fellows on here along this stock. You know, they don't really know what's coming, right? If Johnny Cox actually thinks that that 50-day moving average or whatever dilution lockup and it's heavy bearish. That. Yeah, so I usually will come in here, research these SEC filings, look at these numbers, get an idea of what the company's doing, who might be buying, who might be selling, if there's any value, if this company is something I can go long and make some money, I obviously will. And then, I like to try to run my portfolio 50-50 long short. Right now uh, I don't really have much. I got a lot of cash sitting around, um, waiting for some opportunities. I was long a company called Gaia. Um, they had pretty good earnings yesterday. Uh, right. And someone in my chat had been covering them for a while. Uh, Let me see. So Gaia is a company that I like long. What, like, these guys are gonna die. There isn't much going on with this stock, and there shouldn't be. This is a really ugly company. All right, so I'll probably be shorting this. If this gets back into the nine, let's do a little bit of research on this. It's I'll plan out the trade a little bit so we have an idea of what we're looking for on this. Ideally, I want to try to get short around. Let's bring up the chart here. All right. So this is going to be a short trade, and what we're going to do is, we want to get this short around 10. I mean, 9 would be, if this gaps up to the nines, let's see how much room we can play with. JFIN, the price of the stock is $7.17. Uh, so this says probability of being wrong. Yeah, we're going to be right on this one, and I'm relatively confident. So, right, this is like a 70% chance, I would say, but we'll be a little bit more conservative. This is not it's a good play, but this is also, keep in mind, this is China. these stocks, I don't know their game really, like the back of my hand. I do know a little bit, like NIO is, it's blatantly obvious that that is going to zero. They're really, really in some pain. So every company is different. All right, let's plan this trade out here. We're gonna start scaling in, you know, in the, and we'll probably throw on a 2% there. Why is that saying that? This is supposed to be 3. Yeah. All right, then we'll add a 1%, and then we're gonna add a 3%. That will be, probably add, this is probably gonna be a 2-2. I could probably even go up to 8 on this. What's going on here? That'll be around $10 a share. And this is kind of just a plan. This isn't exactly how I'm going to be watching it in the morning. And then if I could get some shares off, this is going to be 9, right? Anything above 9 is a gift. But we might be able to get somewhere in that 980, and then we get 1150. That's a miracle, right? So let's be a little bit, see if this is a worthwhile trade. Right, and then we'll be really patient and we'll add kind of hopefully in that area. Let's just say 1150 for now. And that'll be a big add. Right, then that next level could be a risk. We might have to cut it down a little bit. Or it might, this might not be a play at 9, it might just be a play at, and then I think 750 would be a takeoff for 1%. 7 would be a takeoff. This could really go down if this goes down. .17 times 0.9, right? That would be 640. So at 650 would be our second cover. $650. And then takeoff number 3, that would lead to a swing. Even the second half could lead to a swing. Um, if we get a great entry up in the 9s, so this could not do a PR, and this could just immediately crash, and we could potentially make a trade for, just playing the red to green move per se, but I don't know if we're gonna get that. Now, we'll just we'll cover everything at 650. We'll get out of that. Right, we don't care so much. And now, all right, we can shut that off because I'm gonna wrap this up. Right. Why is this not adding right? This equals this divided by price. So if we do end up making this trade, we have, even though the risk to reward is only, 1.4, 1.5, uh, this is a pretty, we got a lot going for us in this trade. The earnings look like crap, really bad. They don't have a moat, they don't have a lot going for them at all. The massive overhead supply with the lockup. Uh, we got, you know, obviously we have China is a, that could be a negative catalyst for a short position, right? If there is a deal made, we could have a little bit of an issue there. So something to consider. But overall, I mean, on a bottom up level analysis, like this is a relatively good trade. This is a likely winner if we give it enough time. And we could probably even get this. And to be honest, if this really did get up to 1150, I would definitely be throwing on an extra five. Like I would be throwing on 5% because, you know, this is a pretty good opportunity. And if it gaps up, it might just be a straight gap fade deal. Um, so we could really, if this gapped all the way up to 10, could be a little bit different. But we could play around with these numbers. Basically, this is kind of just a guide that I use to, get a feel for, like this could be a 10% position. This could be the type of play where, usually if it was more so like this, it would be like I would allocate like this, where it's like dun dun, right? Then this would be 261. I would be throwing on an extra, so it would be like a 1-2 add 6%. So that would give me my 8%, or 9%. Um, that I kind of, and then if I do it that way, usually I allocate to a position 1%, 2%, 3% to get a full position, which is 6%. Um, and frankly, if it's an intraday type deal, and it's a really good short, like this is not the type of position that I would get to 12% on, but this is a winning bet. Right? We're risking, we could be, if this trade's not gonna work right away, we might be able to notice before that, so we could cut the stop out all the way down to 1250. That was a pretty modest stop, and we could play around, if this is ripping volume, right? If this is getting, 3, 4 times the daily average, maybe it's not a day one play. Maybe it's a 2-day play where this goes to 12, right? And we actually do get this. This isn't an intraday idea. This is like this might take 2 days to get to 1150. And then on that third day, we would be playing the reversal. This isn't something I would mind holding, 8% overnight. A little bit more than a full position because, I think the downside reward is obviously there. Um, right, yeah. So I could make, close to $2,000 on this. Um, if we get that trade, chances are we won't, right? There's a good chance we get like maybe 3%. I don't even think this might not even go to 10, right? So, and then if that is the case and it doesn't go to 10, I mean, it is still a positive EV, but it's not really great. It's an average trade. If it can actually make it to that 1150, I mean that's a big time difference. And like I said, I'd probably go up to 9. I mean, and NIO is another one. Like this is a 0. Like this thing is going to 0. I mean, so we figure what is it trading at right now? $2.34. I mean, if that $3 area is likely to prove to be a major resistance area, um, that 320, 330. One, we have like resistance, right? Let's pull up a real chart. Okay, so we know there's overhead supply at 312 and 298. So if we could actually, if I mean, you could get short in that area. I haven't, I would want to watch this trade a bit. And same with the other one. I like to watch it trade just the order flow and stuff. Get an idea of how many people are watching, what the spread is like. But if we just real quick jot down a trade for that, because now we'll have these in the morning, right? Just don't, not gonna even have to wake up. If the news hits, and I'll be up plenty early, just hit it. Right, so let's go. Right, da 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 da. All right, and then we'll go NIO. Now we want to try to get, it's trading at $2.36. This is, we're not going to be wrong on that. We're not going to be wrong. I mean, there's an 80% chance this goes to 0, right? Starter, we want to get 290, right? We'll do like 1%. If we could get 3, yeah, if we could get 3, then we'll do 312, and then we'll do 330. We'll have a tight stop on that. That 330 will be a tight stop because we really don't know what they have up their sleeve, but we know they're going to run out of cash soon. So they're either going to have to, dump those convertibles, right, or pay them back. They're not going to be able to pay them back because they're not making any money. They don't even have a positive gross margin. So like they're going to burn through that cash quick. And those may turn dilutive. We didn't look at the deal with them, so if they are dilutive, then man, you're looking at we're gonna win. If those convertibles are dilutive and they can send them or sell them under VWAP or something, we could. That's that's ugly. All right, so I ideally we want to cover under $1. Let's just say 70 cents. We got to redo this, so we want to start covering. Do 85 cents and then 70 cents. We'll leave the rest for 15 cents when this thing goes. This will probably trade at like 22 cents if it went to 0. And we don't know that this is going to go to zero. We just really think it is. Yeah, just knowing myself, I mean, let's be real. I'm not stopping out at 3, 4 even. I'm probably not even stopping out at 5, to be honest. I'll probably just keep adding. That's why you kind of have to watch it, right? Because if this looks heavy and it's thick and it's, slowly grinding up, you know, we want to be a little bit slower in allocating. We want to wait for that reversal. It sounds stupid, but wait till the stock's done going up before shorting it, right? Wait till the stock's done being going down before you start buying it. Um, what we want to do here is look up how many shorts are piled in this because this is trash. Only 26%, so that's not too bad. That's not that bad at all, but that is 2 million shares. So be mindful of that. And then let's check JFIN. Let's see how many people are short that. It seems broken. Let's see FHL. Okay, all and then right before we want to what was the stock I wanted to look at? FHL. Right. If in case I wanted to hedge it, what is it worth? Just in case. What's something reasonable? Right. The easiest way that, how I'm gonna just value this is just really easy. It's you just use the Ben Graham formula. Right. So, I mean, this is a good business. Revenues up 40, gross profit 55, net income up 128. Like, I like this one. Yeah, so to find out the short percentage, you just go to shortsqueeze.com. You can find this on the NASDAQ too, and then type in the ticker, right? So GameStop, right? 75% of the float is short. Like these guys might be buying back shares to like really squeeze short sellers because this is a dying business, but they still have some decent life left. But everyone's really ruling it off. Like the dividend's gonna get cut if it hasn't already. I haven't looked at it in some time, but um, let's see what Tesla's out at. These I think this updates on the 15th, so these aren't really this doesn't look. Oh yeah, 28%. Let's check out FHL. High percentage is good in what in relation to what? It, I mean, so the way I would say short percentage works, right? If I'm looking to short something that has a high short percentage, that means people already have found the idea. Okay. Now, I don't know what type of investors, what type of crowd is in that stock. You know, Tesla seems like that's a stock that really likes to squeeze. I've gotten squeezed on it before, but this recent earnings, I really got crushed by it, and it's just, I can't pike because I'm not losing money on something like that. I mean, I will, but not in that particular circumstance when I know, you know, it is a bit overextended and there's a good chance of it pulling back to like what we saw to 315 where I could, you know, potentially get out a little bit easier and like right without so much damage done to the portfolio. Short float, right? Short float. Let's pull this up. So the way this works is, right, the days to cover is the interest ratio, and right, that's, how many times that ratio uses the daily trading volume. Right, so we should see average trading volume is 7 million, 7.5 million, and there are 37 million shares short. So 37 divided by 7.5 equals 4.9, and that is the interest ratio, right? So that's how we get that. Short percentage of the float. That is what that means is, you know, Tesla has this number down here, right? They have 132 million shares outstanding, and basically 30% of them are short, right? That means shorts are borrowing them from someone else. And, that number 28% is simply share short divided by share float. And share float is the total amount of shares that are freely traded. That's what the float is. It's freely traded shares. All right. So you want to look up any quick stocks before I got 15 minutes before I head out. So HPR, right? HPR. What is that? HPR. High Point Resources. Oh wait, let's find the really quick. Let's just see what this sucker will earn. So in the last 6 months, right, what I'm gonna do is I'm gonna take this last 6 months. They had basically earnings per ADS at 14 cents. They are, let me see the income rate. Yeah, so they are improving. Hold on a second. Dun, 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 dun. Okay, right. And now, Okay, yeah, I was looking at the wrong thing. So they are that this is growing nice. This is nice, right? Earnings have increased over 50%. Uh, if we were to model this out, we could see, I mean, I would say we could see some nice potential here. So this will be tough because the earnings are probably gonna be jumping. But whatever, we'll just say, oh, I could look up, we'll see how much, what kind of earnings, the analyst might be telling us about this company. Um, all right, I guess we won't. I don't have any estimates. Basically, we could take 13, we'll just take 14 cents, right? Times 2, 28 cents a share for the year. And now you take the 28 cents, they're going to be growing by like, let's just say 20, right? So 20. What you do is the Ben Graham formula is, I think it's growth times 2 plus 8.5 times EPS. So we're going to take 14 cents 14 cents, right? Times 20. We're going to, project 20% revenue growth. And I think these guys actually do have a moat, so that's a bit optimistic, but this is like a napkin valuation. And even then, if they only, oh, yeah, 14 cents, we're supposed to be doing 28 cents growth of per share, right? Yeah. So that's a valuation of $13.58. Now, all right, really quick, here's how the Ben Graham formula works. Benji, right? And it would be EPS times, and then what we're gonna do put in here is or it's earnings per share times growth, or really it's 8.5 time plus growth percentage times 2 times 2 times 2. And in this case, we have growth. We're going to say growth tab 20%. We have EPS of 28 cents a share, and then we have obviously 8.5 is standard. and then this equals this equals earnings per share times 8.5 plus growth times 2. You know what? Another thing about this is what we're gonna have to do is you actually remove the percentage. So this is actually just gonna be 20, no percentage sign. This is a dollar amount. So now it should be 48 times 28. I'm just gonna enter it. I don't know what's going on with this formula, but I'm not gonna play with it. And this is actually 48.5. So it'll be a bit like a napkin valuation. And this is per share. This is a per share metric as we used um, this we used a EPS, right? If we use just plain earnings, it would be a market cap. So it would look like 20, right? You would have, EPS, which is 28 cents, $0.028 times in parentheses 8.5, and that's the gram number. That's what he suggests. And then we would have 20% growth times 2, right? So 20 times 2 is 40. 40 plus 8.5 is 48.5. And then 28 cents times 48.5 equals $13.58. Now, if you were to just do plain earnings, I think you could probably, yeah, should still be able to do that. But you would get the market cap instead of, uh, you know, the per share valuation. And then to determine, what kind of trade we're looking at in terms of percent, we would do, what was the current price of FHL? All right, I guess it's FUT 1120. So if we bought it here, right, at 1120, you always want to try to get a 15% return. So this is 1120. We're saying 1358 is our target price. And now to figure that, we want to say, now we want to take, I think we want, yeah, we want to take 1358, subtract 1120. We got to throw some parentheses around here. And then what we do is we divide it by the original price, and that should give us our percentage change, right? So we're basically saying here, we're kind of saying, hey, look, FHL is trading at a discount. It's a little bit undervalued. Uh, we don't know what I didn't really look too deep into the balance sheet, and I haven't reviewed the company much at all. I know it a little bit. I remember it vaguely. I remember going long, I think at 10, a while back. I didn't really sell it for much of a profit, but I did play it and I did research it quite a bit then, so I'd have to refresh my memory before I actually did go long. But I wouldn't go long really. Maybe I would go long if I was short 9% of JFIN, right? Because then that would give me a net -6 position. You know, if I really needed to, I could use this Futu as a hedge. And if instead of piking on JFIN, I continue to add FHL. And to see if that would be a good hedge, we would want to we want to dig onto that as well. And how I would do that is I would go to, I keep typing in this one, but I want to see this. Futu, right? Yep. Okay. And then I mean this thing has gotten crushed. This thing has really gotten beat down. Uh and this is China. They got them through trade war. There was some criticism probably. I know TIGR is the main competitor that I found, and that's obviously getting crushed. And then now we also have JFIN, right? And JFIN looks like trash. And then we'll throw this on there. What's going on with this chart? It needs to be like, I don't know why I can't mess with the scale on this. That's quite frustrating. Not sure. Um, Regardless, it's actually very frustrating. Why can't I do this? I don't know how to use this website, but whatever. I mean, it defeats the purpose of what I'm trying to do, though. I think it's obvious here that the bar chart is, you know, Fudu. JFIN, way weaker, relatively way weaker. And, you know, the orange guy, I don't even know where he is. He's way weaker. So, if those guys want to return, they want to pop up again, then Fudu should, if the whole industry is going to do better, FUTU should outperform them. As a clear advantage over them. It has, you know, oh, it seems like it's got a lot going for it. Um, Now, there there may be some weakness over there in China from what we're seeing from the JFIN earnings report, but for the most part, these guys look like they have a pretty significant advantage over the competition in China. So definitely something to, without a doubt consider. I mean, it may not be that great of a hedge, but I think it could work. It would help me, control my emotions if I was short like a 9% position at JFIN, which it seems that, I like that trade, but it's probably not a 9%. It's just a 6. Maybe intraday you go 6 to 9, but overnight I'd probably cover at the end of the day if I wasn't completely confident in it, or try a hedge like uh, FUTU. And then if you do hedge that, you get a little bit long exposure to China, and if I'm gonna be shorting NIO, which I think I will be, then you can totally, you know, use that as a little bit of a China hedge as well, even though that's a pretty soft sector over there, or industry, from what it looks like. Um, it could work. But all right, I'm off. I'm about to go to bed and read a little bit of my book. So I'll catch you guys later. It was fun. I might start doing these a little bit more often. So keep an eye out. All right. Well, until next time, good luck. Happy trading. I'm out of here. Peace.